Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, so we have a rally on Wall Street today. This is on the back of Microsoft and Meta earnings, both coming out better than expected. Their guidance was solid, really calming nerves on Wall Street, at least for now. Now, listen, if you looked at yesterday's price action, the markets took that big tumble early in the morning on the back of a negative GDP rating, as well as essentially some negative news on jobs. Now, mid-morning around 10:30, all of a sudden the markets reversed and basically climbed the rest of the day. Now, again, we did get some PCE data at 10 o'clock that calmed nerves on inflation, but I have to wonder, based on especially the late day move up, if some of those earnings reports were leaked out to big players and they ultimately started buying up the market ahead of the release to the public. All right. Again, just things you have to be aware of. Things can slip through door cracks, and oftentimes they do. We've seen that quite a bit with economic and big trade news announcements recently as well. All right, let's turn our attention to the markets here. The S&P is up sizably on the day, although fading just a little bit. You can see that basically here was that big sell-off on the back of the GDP and jobs data yesterday. Remember, yesterday was the ADP private sector numbers. Tomorrow morning, we'll get the non-farm payrolls report. All right, then you had basically the turn on a dime and the big rally, and then the big surge here leading into those earnings. And again, the market's trading pretty nicely higher today. Now, a couple things to go over. Number one, do you guys remember my target on the S&P 500? If we go to the S&P 500 here, we can see that the daily chart, remember the gap fill that I've been talking about on the SPY, it equates to the S&P. It's right up here. We're going to be opening below it, so we're not there yet, but we sure are close. And this is where I said I would begin to enter shorts on the S&P 500. Now, I'm already in a small starter position on a short in the NASDAQ via the QID with members of Smart Money stocks and ETFs, and I will be looking to add if we move a little bit higher. But again, we're going to be opening up probably around 56.25. The gap fill officially is at around 56.75. All right, so again, that is my line in the sand where I think the S&P will first hit its major resistance level. All right, flipping over to the QQQ, this is where we were the last couple days, including yesterday's close. You can see right on its gap fill. Today, we are gapping above that, and that means that we could be headed up to the next pivot I gave you guys, which is around 493 on the QQQ. So again, Qs are rallying. We know, obviously, on the back of the earnings from Microsoft and Meta. Now, interestingly enough, I have some great levels where I'm going to be looking not only for day trades on Meta and Microsoft, but also potentially starting to nibble on short trades on the swing trade side. All right. Now, just one little other tidbit that I think is worth noting today. This morning, we got jobless claims. Jobless claims come out every week, right? Every Thursday morning at 8:30. How many people filed for unemployment is announced from the previous week. This week, we jumped up to about 245,000 people filing for unemployment. Now, again, that's not an abnormally high amount yet, but basically for the last 2-3 months, we've been around 220. So it is an uptick. And what I want us to do is watch to see next Thursday, do we see that jobless claims come down to 220 again or 225? Or does it stay up around 245 or even move higher? Like, these are things we have to be monitoring very closely, as we know that the economy was a negative growth driver, or we saw negative growth in the first quarter. And obviously now these tariffs are starting to take effect. And in theory, that should slow the economy even more. Eventually, businesses may be forced to lay off people quite substantially. We know the government's been laying off a lot of people. And even UPS just recently announced in their earnings statement that they would be laying off 20,000 people, just them alone. All right. Flipping back to the charts we go, the 10-year yield continues to kind of hover on this downsloping trend line. It keeps on trying to go lower, then kind of gets a bounce back. But basically, I'm just watching this for an indicator of what's going on with the overall kind of the feelings of the global superpowers around us about how they feel about our debt. If we start to see this going up, and especially if the economy continues to weaken. Because remember, the weaker the economy, the lower yields or the interest rates should go. So this should be going down, especially with a print in the negative territory on GDP yesterday. We should be seeing yields probably in the high threes, if not lower. But again, they've been somewhat elevated, even though they've been coming down. So really what we're watching here to see is how is the brand of the U.S. amongst other countries in the world? Are they willing to buy our debt? Are they willing to buy the dollar as a safe haven asset again versus what we saw over the last period right in here where we had the massive spike up on the 10-year yield? So I'm just watching this trend line. If we break below, I think we can actually go lower. But if it holds here, it leads to the possibility that yields could turn back up, which would be very detrimental to the stock market. Next up, the U.S. dollar. I still think the dollar should have a bounce here. Now, in normal markets, so again, normal markets, which really we could be in here potentially, we could see again this trend line, which was broken to the downside. We should see a retrace to the scene of the crime and then eventually that next move lower. So far, we've gotten a little bit of a bid, but it certainly hasn't been a major bid on the dollar. But I would still favor a move back on the USD or the Dixie here, the DXY, back to 102 before that next leg down. So again, just to be clear, short-term neutral to bullish bias on the dollar, but again, mid to long-term would still be bearish. Again, it should get rejected at this trend line and start coming in lower. Let's turn our attention to Microsoft. Microsoft up about 9% plus on the day. That's a huge move for an almost $3 trillion company, about $300 billion in market cap being added here after their robust earnings. But look at this, guys. So I was doing research this morning and thinking, okay, well, where do I want to day trade this and swing trade this on the short side? First thing I came up with was a downsloping trend line here. So high, this is the all-time high right here and right to here. So that's right around 438. Then in addition, there's a gap fill. See the close here and then the gap down here? This is a huge gap in here. And we know gap fills are good levels of resistance. So we put in a trend line right there. And so basically what this does is it gives me a range both to day trade and swing trade this, of basically shorting right around 438, 439, all the way up to 442. The last thing I do, and this is something I do at the very end, once I found my levels, I use my fib tool and I do from the highs to the recent lows. And look at that. So from your high here to your low down here, and look at the alignment here. This is a perfect 786 fib retrace. And so what this does is it adds an additional factor to this zone of resistance as a technical trader that is trading based off probability, not based off emotion. So suffice it to say, we're not up in that range. We're only trading at around 429, 430 on Microsoft. But if it gets to 438, 439, all the way up to 442, 443, right here, this $5 range here, there should be massive resistance on Microsoft. All right. And remember, I say should because there's no 100%. So should means high probability. It doesn't mean guarantee. And we always have to remember that, folks, in trading. You know, the market teaches me lessons all the time because anytime you think that you have the no-brainer trade, it's usually the time it's not a no-brainer trade. All right. Back to the charts we go. Let's flip on to Meta. Meta, which just made a new pre-market high at 590, pulling back just a little bit right here in the pre-market. It is up, I think, around 7% pre-market here. Daily chart here. This is the big one, guys. So look, we have this parallel channel, beautiful pivot low from 2023 October to this low here around 2024 August, July, right through here. And if we look at this, this is right at the 600 even number Pierce. Now, right now, we're trading just below 590. But what I'm saying to you guys is that we should see good resistance at a retrace to the scene of the crime. So again, you broke down, you retraced once, got rejected, double bottom, then came back up. And on earnings, we're likely going to push up in that range. And then I do the same thing. I take the all-time high to the low right here, and the 50% retrace is right at 609 or so as well. So basically, I would say 603 to 610, you're going to be looking at major resistance on Meta. That might be a level I might even start a swing trade short there Again, just a starter position, but one to keep an eye on. Qualcomm getting hit on earnings. You can see again the drop here. Yesterday it closed at 148. It's trading at basically 139. Percentage-wise, is that a massive move? No, but it is a decent move on Qualcomm to the downside. But what we can see is just from your low here to here, it's only a little bit of a pullback. So when you look at where this could be a bounceable opportunity, the first thing I kind of gravitate to is this big move here up. And then this was your pullback before this recent move. So essentially, I start looking right around 132 to 131 right in here for that support level. All right. So again, this would only be for me a potential day trade. Swing trades have to be major levels, meaning like, longer term trend lines, retrace to scene of the crimes from parallels that go back years, all of these different metrics. Those are what we want to think about for swing trades, like extremely extended into a multi-month, multi-year trading level, some sort of multi-factor trade, Fibonacci, retrace, etc., versus day trades can be more just pivot points. Because remember, a day trade is something you enter intraday, and then generally you exit that same day, right? So you're in and you're out, sometimes in minutes, sometimes in seconds, sometimes in a few hours. But the idea is it's just a small level that can create a quick move for a day trader versus a swing trader. You're holding for days, weeks, even potentially months. Basically, a swing trader is anyone that's holding for less than a year. Once you get over a year, you're considered a long-term investor because it's long-term capital gains versus short-term capital gains. So just a couple little tidbits on that front. Okay. All right. Let's get into some of these other ones. So a bunch of stocks reported earnings this morning, but most of them are non-events here. You can see that, Eli Lilly is falling. Eli Lilly yesterday closed right around 896. It's trading at 856. That's about a 5% move on Eli Lilly. But again, if you look at where it is from yesterday's high and then the recent lows, honestly, this would probably have to come down here for me to trade it on Eli Lilly's front. Roblox reported earnings this morning. That stock's up a little bit. Aggressive traders here. This gap fill. This is a gap fill. This high, close here, and it opened down. Actually, it opened all the way down here. So this would be a gap fill at 75.50. This actually would be a potential good day trade. I don't think I would have the guts to swing trade it on Roblox, but you can see we're not that far away from this level. So that is going to be one to watch. CVS is gapping higher today. So again, CVS is up a little bit. If we zoom out, you can see really for me, 79 and change gap fill right there would be a little bit of resistance. And then McDonald's reported as well. McDonald's is barely moving. Closed yesterday around 319.50. It's trading around 315 here in the pre-market. All right. The big movers and shakers. Let's look at Bitcoin here. Could we be getting a bull flag move up on Bitcoin? The answer is, as of now, yes. We've been talking about how this was resistance, but you've also been putting in a bull flag. All right. And again, looks like the bull flag with risk on in the stock market is beginning to play out. So beginning to push up. Now, again, what does this mean? Do I short it here? Heck no. When you have a bull flag, doesn't matter if you have resistance. It's a bullish signal versus a bearish signal that basically negate each other, right? So a positive plus a negative, they equal zero, essentially, a positive one, negative one. And so you don't want to step in front of a potential breakout. Now, again, it's not to say that if Bitcoin doesn't get up, let's say to 99, somewhere up here, there might not be a shortable level there. But at this point, I'm sitting on the sidelines. As I've said the last few days, the bullish pattern, you have to respect it. And you also have to respect the resistance and just wait to see which way breaks. And then we can look to see what the aftermath is. What are the levels from that point of contention? All right. Looking at Ethereum, I do have a long Ethereum with Smart Money Crypto members. That's starting. This is a beautiful bull flag. I actually really like this chart. Let's see if it can get some momentum here. Look at that beautiful flag. Now, again, the key is it's got to take out this 1860 level, but it does have the potential to get up to about this level here, around 2100 on the chart there. Now, gold is taking a hammering today. Gold is dropping precipitously. You can see it's already off the lows a little bit, but should anyone who has tuned into my game plan yesterday, the day before, or the day before be surprised? And the answer is no. We've talked about the bear flag. We talked about the topping tail, the big parallel. I said, guys, I'm short gold. I'm short GDX. I'm short Newmont Mining with commodity members, Smart Money commodity members. And so essentially we were positioning ourselves here accurately for this move down. I did move out of my short on gold, but I'm still holding GDX and Newmont Mining on the short side at this point. So basically just paring back my exposure as we get deeper in the money. And again, I think that's a big lesson to learn. While most people want to swing for that home run every time and just max out their potential gains, I've learned the hard way that that doesn't really work so well. Sometimes it does, but most often, we all get too greedy and we're like, oh, I can go, so much, I can make so much. And then before you know it, it reverses. So what I do is, when I'm in a short, as it comes down, I take a little off. As it comes down lower, I take a little off. As it comes down lower, I take the rest off, just kind of leg out. And then just like I do on swing trades, right? So I started a short on the NASDAQ basically a couple days ago at the highs of the close from yesterday, which was also the high from the previous day. And it's up, but I only started a small short position there. And then I can leg in, dollar cost average up. And again, that comes from me recognizing that while technical analysis is a fantastic, markets can break levels, right? So you could have the greatest level in the world. It doesn't mean the market won't break it, or that stock or that crypto won't break it. And so I always found I make more money by erring on the side of caution and inching in versus jumping in the water, right? Like when you come up to a lake or a pool, we don't just, without even touching the water, we don't just jump right in. We usually dip our toe or our foot in the water to see the temperature first. Is it freezing? Is it warm? What's the temperature? And then we decide after that to go in. Same kind of mentality behind that. All right. So again, gold falling. I still think ultimately we're headed down here at minimum to around 3140 to 3150 on gold. And yes, I am still a long and midterm bull on gold. I just trade the charts. And so if the chart said to me, hey, you got this amazing parallel channel that we just tagged here, these lows with this high. All right. So let's short it, right? Then we got this beautiful topping tail right here, which is a bearish reversal signal that reinforced the factors here. And sure enough, we followed it with kind of confirming move down, then the bear flag, and then the breakdown right there. All right, let's take a look at silver here. Silver did pierce this trend line, but has gotten back above. So this support is still holding on silver. And again, silver's right now performing better than gold, but granted, it didn't go up nearly as much as gold either. So it's just staying here at support with resistance up in this range. Oil bear flag, amazing, guys. So look, the bear flag, once it triggered, look at how much it fell. Now it's bouncing a little bit off the lows here, but incredible drop. Ultimately, we probably are due for a small bounce, but then I think it rolls over, tags this low, then bounces again a little bit, and then goes even lower. But that bear flag pattern was just a fantastic pattern recognition right there. Natural gas right here, guys. We have nat gas, longer term trend line. We retraced to the scene of the crime, got rejected. We hammered again today, and so far it has been rejected. The only thing you want to be aware of here, folks, is that if we go sideways, what type of pattern is that going to create, right? So right now it's still resistance and still favors a pullback. But let's say it starts to do a Bitcoin where it goes sideways like this off of this up move. And let's say we're over here. Then you all of a sudden have to flip your bias from being bearish to being bullish. And this is how real traders trade, right? If you're a technician, you're not worried about sticking to your guns. It doesn't matter. If the charts tell you the probabilities are shifting, you better change your probabilities with the charts. So again, the biggest thing, again, a lesson to learn from today's game plan is being flexible. Be flexible that patterns can change, patterns can fail, resistance and support can fail, or it can work out. It's the traders that are able to spot it as soon as they can or as soon as it happens that will perform the best overall. So be flexible. We all don't want to admit we're wrong, me included, by the way. But ultimately, when we shut down that emotion and use logic and data and probabilities, we're more likely to look at something logically and say, where is it now? What's the pattern now? Might be different from where it was a couple days ago. It is what it is. All right. My lesson for the day there, guys. You guys are awesome. I love you guys tuning in. I love the support. You guys are seriously awesome. Thank you so much. Warm my heart, make me want to perform in these game plans and just teach everything I know to you guys. Thanks again for tuning in, guys. I got to get to my trading room. I'll talk to you soon. Take care.